Hi there. Very good evening to all of you, and I'm sorry I've been late, and I've been late by about 2 hours from the time I should have been online. But here I am on a live feed again with you as we are going to have a break for the next 3 days. So Friday is gone, and I'm really missing the markets. That's the first thing I can tell you, quite frankly. And probably now it's only one more holiday in between that we have to face. That is Tuesday. That's just about it. And after that, we'll have a clean run till 1st of May when there is a Labor Day, you can say, off on the 1st of May. Hi, Jayesh. So I wanted to talk to you about everything about the markets, about some of the stocks, and what I consider about the market currently. There have been a lot of views that are coming in that now I need to be online since the market has turned against what I had always projected that the market would be headed lower than 7,500. So I'm not shying away from it. I still maintain my viewpoint that I really thought that the market was overbought at 8,500, 8,700 and should fall. It did not, and we have moved to 9,100. So are we headed towards 10,000? I'll discuss that with you. Why the move has taken place in the midst of such crisis here in India and globally, especially in US, with the kind of pandemic that is happening there in United States. So I'll discuss all those points, and I'll discuss some of the points that maybe normal retail investors might be missing out, and they might not be knowing about it because the earliest fall of this kind that happened was around 11 years back. So it has been quite a long time since we saw more than 30% fall in the market. So we had a 60% fall in 2008, and it, this market is reminiscent of that, as well as this market also quite reminds me of 2012 to 2013 period, and then what we saw between 2012 November to 2003 August. So we saw something of this sort happening at that in that duration as well. So I'll discuss that as well. I'm not trying to make excuses as to I'm like why the stock market should fall. I'm just trying to put forward some points which would make you understand the rationale behind the move, as well as make you understand as to in the long run as to what leads to or what could happen in the market going forward. So these are all the things that I'll talk to you about. Also, I'll answer all your queries, whichever queries that you'll be having over the course of this live feed. Thanks a lot, Rohit, for your super chat contribution. If you have any query, kindly put it forward. And thanks a lot for your contribution. Uh, all I can say right now is kindly subscribe to my channel. I have subscribers at the moment, which is in excess of 10,000. Hopefully, I'll have more after this feed. So kindly shore up that subscriber base as well. So keep on subscribing to my channel as well. Uh, so let's take it one by one. And I have a few people online. I currently have 30 odd people online at the moment. So let people join in because I'm already late today. I can understand that people were waiting at 4:15, 4:30 p.m. It's already past 6 p.m. here in India. So I suppose that some more people join in, and then I'll discuss, because a lot of people miss out on whatever I say at the start or the beginning of the live feed, and probably they don't get a chance to go back and watch the whole feed together. One thing I want to make clear that people have written in the message box, and I tried to read all the messages, although I'm not able to answer all of them, and I tried to do that on a Sunday. One thing I want to make it clear that whenever I'm doing a live feed, I try to do it as long as possible so that I can answer all your queries. Other point is, if I do only a 10-minute live feed, then that doesn't suffice. So people was saying that kindly make videos only for 10-15 minutes. So all the complete live feed go on stream. as a live video, which you'll be able to watch later on. And that's why it's a 1 hour, 1.2 hours video and all that. Otherwise, my videos of particular stocks that I analyze, those videos are only about 10 to 20 minutes at max. Very rarely those videos go on for 25, 30 minutes, unless they are the question answer session in which I try to bring in as many questions as possible. So, Rohit, thanks a lot for your contribution. Chitresh, uh, hello to you, Chitresh, as well. Hi, Ravi and Ashish. Hi, and thanks for joining in. Muhammad Najab, hello to you as well. Kiran, a very good evening, and Jayesh as well. So, joining in, thanks a lot, Aditya, for being here. So market will fall. Sensex will come to 23,000. That's one of the opinions. So let's start with the conversation, and let's begin with having an understanding of where the market is currently. So as I look at it, the market is at 9100, 9120. It made a sharp move over the last 2 days, last two trading sessions, and we have seen the market move from 8,000, 8,100 all the way to 9,100 in virtually no time. In just 2, 3 sessions, we are there. So in order to understand what has gone on with the market, we need to go back to previous bear markets, and this is where we miss out. So every bear market has a tone of itself. If we go back, let's go back to 1997 to 1999, 2000 period, in which there was a crisis with the Asian economy. There's a crisis with the Asian currencies, particularly in East Asia, in countries like South Korea, China, Thailand. And we faced a turmoil for that period in which HULs of the world and Colgate and Britannia's of the world did well between that period, and nothing else was able to sustain. And that was a prolonged period of a bear market in which the market did not fall a lot, but it did not go up. Then we had the 9/11 situation in 2001. Post that, the market went into limbo for a couple of years, and then we saw that big bull market of leverage in which high debt companies went on going higher, and we had the Suzlons, L&Ts, Aban Offshores. Aban Offshore moved from 500 rupees to 5,000 rupees or something like that. Suzlon moved from 3 4 rupees to 300 rupees, and so on so forth. We had the real estate companies. You look at a DLF at 2,000 rupees at that point of time. It was incredible. And then we saw that fall in 2009, and then a recovery after about 13, 14 months. Uh, a similar pattern played out between 2011. So the if I want to, and not many people talk about it, or not many experts talk about what happened post the up move that took place after the 2009 fall. So we had a fall from 2008 January till 2009 October, and then there was an up move, then there was a fall, then there were three sharp rallies between 2008 January till 2009 March. There was at least 3 to 4 very sharp rallies of 20% or more in the market, and yet market fell at least 50% from the top of those rallies. So the markets went up in October, went up in January, and went up in July of 2008 as well. But we had a mega fall in February of 2009, and eventually in March of 2009 we made the bottom, which was an even lower bottom from the 2008 October lows. So in 2008 October, we made a low of, I think, 2600 or thereabout. And in 2009 February, March, on March 9th 2009, which is regarded as the bottom, we went all the way to 2100 or 2200 on the Nifty. I'm talking about 2200. So you cannot rule out another mega fall in this market. you cannot rule out that the market could fall 30% from these 9,000 levels. And that's why I am not ruling out a 6,000 in the next 6 months. Now, the point is whether 10,000 would come first or not. My point in that is that when I started my channel, it was all about long term investments. So and that's what I talk about. I talk about investing into the market for 4, 5, 7 years. I don't talk about even investing for 1 or 2 years. So when we are looking at the stock market from a 5 to 7 year perspective, in that regard, I believe that we need to be patient and we need to look for opportunities at lower levels in a bear market to get into the stock market rather than getting trapped at 9,000, 9,500, or 10,000 levels. So you need to have that understanding. This market could well go to 10,000 and then come back, but with the kind of macros that is currently taking place, and I'll discuss about that in detail later on in this feed. Uh, I believe that the market is surely headed below 7,000 over the next 6 to 8 months, anytime, maybe in the next month, maybe in 2 months' time or so. That's my firm opinion about the market. So I'll go back and discuss about 2012 and 13. Before that, I want to just let you know that if you want to ask me any questions in between my analysis, you can ask it through the super chat feature, and I'll definitely answer that immediately. Other questions can come by here, and I'll answer that later on as well. But if you ask me through super chat, I'll answer that immediately, and that will help me grow the channel as well along with that. So kindly take that into consideration. Also, subscribe to my channel and hit the bell icon so that you can get my videos straight away when I post it. Uh, and you can visit my Patreon website as well. On Patreon, I try to answer all your queries immediately. There, 24 hours a day, I'm available for you to answer the queries. And you can join that Patreon website at only $2 a month. That's 140 rupees a month. The link of the Patreon site is will be provided in this live feed. I'm sorry, and also they are provided in every video that I publish on different stocks. Coming back to the markets, I want to tell you that okay मनोज, I'll definitely describe in Hindi as well. uh, अगर मार्केट के बारे में फिर से बात की जाए तो फिर मैं ये बताना चाहूँगा कि 7,000 का लेवल बिल्कुल आ सकता है और 7,000 का लेवल अगले 2 से 3 महीने में आ सकता है, चाहे ये मार्केट 10,000 पे चला जाए तब भी 7,000 का लेवल आ सकता है। बेसिक पॉइंट मैं ये कह रहा था। Now coming back to the markets and thinking about 2012 and 13 and why uh, I was trying to describe about it is because not many experts are talking about 2012 and 13. What happened in 2010 was we made a short term top again at 6,300. Now, why that is important? In 2008, we went to 6,357. In 2010, we went to something like 6250 or 6280. And from those levels, we kept going down and we went to as low as in December 2011. So that is in 1 year time. We were down to 4,400 or just below 4,400. So we had gone down by around 1,800 points from those levels, some 30% from those levels. And I believe that we could easily see 28 to 30% decline from the top, whatever top we make in this rally, in the current rally that we are going to have. And it's going to be a slow, excruciating move downwards towards those levels in which nifty stocks will suffer the most. Mid cap, small cap will suffer, but not a lot because they are already beaten up. So this is my assessment. And if you go back and look at those charts between 2011 January to 2013 August, and you'll understand what I meant by it, or not even 2013 August. Just look at 2011 as a whole, and you'll understand. And not many people are talking about what went on in 2011. So this seems like we are heading towards that direction, we could see 10,000, 10,500 levels, but then we'll see a sharp downtake of 30-35%, in which at least we will go to 7,000. That's the least. Now, what is the rationale why I keep saying that we could go to 7,000? I'm not sure about the upside. I'm not sure where this upside will end, but I'm pretty sure about the downside. And why I am sure about the downside, I'll tell you reasons one by one. Number one reason is this, that the current pandemic is not ending. It has not ended. It is not going to end in a jiffy. So, my point here is, how long will this continue? Will the lockdown uh, process start again? Will there be lockdown in some of the major states? Bombay is looking very difficult at the moment. Kerala and probably Punjab has already announced, a couple of states have already announced that they are going to extend it by another couple of weeks. If this continues even for 2 weeks more, this is going to have a detrimental effect on the economy, and even one day loss for any company, say an automobile company or other companies, is extremely difficult to fathom in the long run. So when you consider, if the whole of April goes for some of the companies with zero revenues, then there's a complete dent for at least one quarter, at least one quarter for that company, and the whole year's numbers would be disturbed. So the June quarter would be gone completely. Uh, Now, just for instance, that the government decides to continue the lockdown in its present form for the next, say, 15 days or 20 days from the time, and probably till 5th of May, then what will happen is this is going to percolate down to the grassroots level, and this is going to percolate to the level in which the second quarter numbers would be hurt, and people will not talk about then FY21 numbers. That's one point. Second point is, and this is a medium case scenario, I'm not talking about the worst case scenario. The worst case scenario could be very, very dangerous, and in which we believe that the markets could be shut till August or September, and there could be, means, difficulty in producing the same sales numbers till probably second half of FY22. So let's not talk about the worst case scenario. Let's talk about what is the base case scenario that I'm looking at. So I'm looking at, if there is another lockdown, then probably another 2 weeks gone. We come to May. This quarter is gone completely. And probably in some of the sectors like hospitality, airlines, aviation, you say railways, in you can say recreation sector, malls, going out for shopping and so on and so forth, these things will take a back seat for at least next 6 to 8 months. That means this whole FY21, you can say financial year, is gone for some of these sectors or these companies. What will that do? That will hurt the financial sector. So if you look at the financials or the companies that you always talk about, the Bajaj Finance, it's down to 2000. What is the reason? This is the reason, that if that people are fearing that if this whole year goes like this and people will lose jobs, people will not be able to earn a lot, people will be in complete difficulty with respect to paying their debts, paying their EMIs, paying their EMIs for their phones, for their bikes, for cars, for houses, and for everything that they have bought, anything, then it would be extremely detrimental for companies like Bajaj Finance, Bajaj Finservs, the banks, Kotak Mahindra, any bank for that matter, HDFC, and so on and so forth. And I am not talking about those loans which have been given to, say, in the rural economy or in agricultural space, or in, you can say, debt companies like in the sectors like real estate or infrastructure. I'm not talking about such kind of loans. I am talking about simple retail loans, which are very strong, which have never been, means, most rarely defaulted. If that goes out of the window, then there is extreme trouble for the markets as a whole, and trouble for these sectors, trouble for the banking sector. And if troubles come for the banking sector, which is 40% of the Nifty and Sensex, there's no way Sensex and Nifty can stay at those levels. That is the first point I want to make. So already 2 weeks are gone. Already this quarter looks in deep trouble. Another 2 weeks would hurt the second quarter as well, and maybe this year altogether, because agricultural crops will not wait. So crops that are going to they come out say in April, May, and June will not come out in July, August, or September. So there will be loss of agricultural crops. There will be high inflation, and the government will not be able to control it because they are already spending a lot in the form of giving freebies, and they have to do that for the lower economy people. So there is a lot of trouble which is waiting for us in terms of economy over the next 1 year when we consider India, and I'm just talking about India. Now let's talk about globally. So let's talk about the US markets, and I believe India has gone up because US has stabilized and is going up. Do you think that the US market is going up, and that is very rational in a country where so many deaths are happening, where so many people are getting infected, and where there is no lockdown but there's a situation like lockdown? Do you believe that the Dow Jones or the US economy should do so well, or the US stock market should do in that manner? uh, right, yes or no? Do you believe that 23,000, or Dow Jones should have happened? So I'll definitely start with a poll in that regard, and I would definitely like to know and put it in your comment box as to what do you understand with respect to the U.S. economy, as to how the U.S. markets are doing. I do not think that the U.S. economy would be able to come out of it very easily over the next 6 to 8 months, and in that regard, we are delaying the inevitable. Whatever that has been happening in the European markets, the US markets, or the Indian markets, it is just about delaying the inevitable. And that is why I believe this is all a trap. Even if the market goes up another 10% from here, which I think will not happen, but it may happen, and everyone will be trapped in it, and we will not see those levels of 9500, 10,000 again for at least 2 to 3 years. And we will come down, and come down extremely slowly towards those 6,000, 6,500 levels, like we did between 2011 January or 2010 December till 2011 December. Because if you look at that period, it felt like we are in deep trouble. It felt bad. Investors were not making money. Investors into good quality companies like HDFC Bank, HUL, Britannia, you can talk about CET. In that time, I mean, Colgate was one of the marquee stocks. And you're invested in those companies, Dabur, etc., and you're not making money, and it was coming down slowly, 0.5%, 1%, 0.5% there, 1% there, and slowly we moved from 6200 to 4400. So we had a sharp fall, and then we moved up. But then now, what will happen is we'll have a slow grinding move down towards those 6,000, 6,500 levels. There'll be a shift of, you can say, leadership from financials to maybe other sectors, which I'll talk about later on, but there'll be a shift of momentum in that. And this is why I believe that the market should not sustain, because the external environment, the current situation with the pandemic globally as well as India is bad. Second point is Indian economy was already in doldrums with 4%. I think it's going to go into deep trouble now, and it's going to go to around 2%, 1 or 2% for this year. And on an EPS basis, the Nifty EPS is going to suffer. Now, the third point I want to make here, and I was listening to CNBC TV 18 a couple of days back, and Prashant was on that channel, and he was saying that based on the Nifty EPS of FY21 of 530 rupees, the current, you can say, PE of the market at 9,000 is around 17, 18 times, which is not very cheap, but not expensive either. Now, I don't know from where that 530 rupees came, and I have discussed about EPS of the Nifty a lot. And that is the most important part of investment, I believe. And that is the most, you can say, ignored part that is talked about on the television. And that's why I want to talk about it here. And this is the third reason why I believe that the Nifty should at least be at 7,000, if not lower. Current EPS of the Nifty is 450 rupees at max. It's between 430, 450. Let's take it that we are at 450 for FY20. At 450 rupees, we are at 20 times earnings, current earnings. Do you believe that the market should stay at 20 times earnings in a scenario where you're going to make a 2% growth? I don't think it is possible, and I don't believe that such numbers could sustain. And I think if you are making 450 rupees at the moment, you're going to do even lower, or you're going to go even lower going forward. So I think next year you're going to do 430 or 40 rupees. So let's say we are down by 2 percentage point from here, because the numbers would be bad for FY21. So instead of what he's saying 530, actually the numbers would be 440 rupees. At 440 rupees, at 9,000, you are trading at 22 times earnings. This is absolutely unsustainable, and we should be trading at 15 to 16 times max. And if you take it at 16 times for 440 rupees, then it comes out to be around 7,000 to 7,200. I believe minimum will go to 7,000. This is all a trap. And then people will talk about Nifty earnings not coming through, and people were expecting 530. Now we are at 440, and a couple of companies did not produce at the lower margins that everybody was talking about, and this and that. But I already know it, and many people already know about it. So this is why I believe that this is all a trap. Major investors have already sold their shares, and if FIIs have sold at 8,000, 8,400, 8,300, what's going to stop them from selling at 9,000, 9,200? And remember, FIIs do not come back quickly. They do not come back in, say, just 2 months, and after selling, they just come back after 1 week and say, okay, now India is cheap, let's buy it. It doesn't work like that. They look at how India will perform over the next 1 year. They look at how the companies are going to perform, and then look at select companies and buy into them. So if FIIs have sold more than 80, 90,000 crore over the last 1 month, 1.5 months, or even more than that, I don't know how much they have sold. They have sold big. They are not going to come back in a hurry. In 2011, when they started selling in 2010, 11, 12, they came back in 2014 when it was apparent that the Narendra Modi led BJP government is going to be formed, and it was looking pretty good for them in February, March. They started putting in money from February of 2014. So they took out money in 2011, all throughout 2011. They did not come back in 12 and 13. They came back in 2014. This is another reason why I believe the next 1 year would be extremely difficult. This is the fourth point I want to make here. And if you like it, kindly subscribe to my channel and like this feed, uh, because I think these are the four big reasons why this market cannot sustain and cannot go up. The fifth point is about short covering, and many people are talking about it. And although I believe that this is only a byproduct of what is happening, so the fifth point is the short covering. What has happened is we have moved from 7,500 to 9,000 levels, but still we have seen very low delivery volume. So the delivery volumes has remained between 30 to 40% at max in all of the stocks. So you pick up any large cap, small cap stocks, the delivery volume has not been great apart from very few stocks. Other stocks, there have been very low delivery volumes. Secondly, there have been very few, you can say, volumes at all. So the volumes itself has been low. This is because FIIs have virtually exited the market, and on low volumes the market going up is never feasible. And this is another reason why I believe that one should be very careful in this market, and that is why the market is going up something like 20% in 2 weeks or 1 week, and like that. So we saw 8,000 probably 2 or 3 sessions ago, and from 8,000 to 9,100 in no time we have moved. So probably this will continue because the US markets are doing well, but I don't think US should be doing well. The way the circumstances are there, we could see a complete lockdown in US very soon, with the sort of things happening. People are saying that the peaking out process of the pandemic is going to take place this weekend. But what if that doesn't happen? What if this just continues and prolongs for another quarter? Then will the market keep going up to 12,000? How long will the market keep going up? And that is what I am saying. The downside here in this case is infinite. The upside is capped. Maximum 10,000. At 10,000, just imagine at 440 rupees, you would be trading at something like 25 times, 24 times earnings, 23, 24 times earnings. That is absolutely ridiculous with the kind of earnings you're going to have in FY21. I have no question about it. And I'm not talking about mid and small caps. So kindly take that into consideration. I'm talking about the large caps, the nifty stocks. They are not going to perform in the next 1 year. So anybody who's looking to get into Bajaj Finance, get into HDFC Bank, Kotak Mahindra Bank, and all these banking sectors, that is why I'm keeping a blanket to sell and a hold on the banking sector altogether, and not to look at banking and financials, because they are going to suffer big time. This is no joke. This is not a financial crisis. This is a health crisis, and nobody knows how long this will continue. I'm not trying to spread panic here, but the effect of it on the economy and the stocks, because we are talking about the stock market, the effect of this on the stock market will be very big. And yes, people would come out of it and people will start buying and everything else, and people will be more aware of things, but the markets will not be able to recover that quickly. It will take at least a year after this pandemic is gone from this country, for the stock market to come back, for the companies to come back with their numbers and all. And it will take at least 6 months after this pandemic is gone, that the market would come back. I mean, market would come back with its mojo. So the markets always discounts the future 2 months. I mean, 2 months forward. I agree with that, and that is why I'm saying that if you consider that June, July would be the end of the pandemic here in India, then probably by December the market would start going up, because there will be another wave of selling that I expect from May onwards, or after this move is over. So this is my 5 conditions why I believe that the market would fall. If you don't agree with it, kindly write in the comment box. If you agree with it, write in the comment box. Please like and subscribe to my channel as well. Thanks a lot, Prashant Khanna, for your 100 rupee and this super chat. Uh, just stacking up cash, waiting for Nifty to fall below 8,000. Might be a long wait before I start investing. Doing a bit of averaging here and there. You're correct doing that, but even in averaging terms, I say, see, now I'll discuss about stocks and the market and what needs to be done. That is not to say that you cannot buy anything at 9,000. I'm not saying that. But the point is, the market, it's not over. I am just trying to tell you that the fall in the market is not over. Do not consider that you have become a James Bond and you have found the bottom at 7,500. Maybe 7,500 will not come, but your stocks will not move higher. And this is what happened in 2011. See, in 2009, we made a bottom at 2,500. In 2011, we went to 6,000. We quickly went back to 5,000. We never scaled back to 6,000, although we always thought that it's only 10-20% higher. We'll go there in a year, 2 years, or this and that. We didn't go there to 6,000 till 2014. In 2011, the markets used to go to 5,200, 5,300, come back to 5,000, and many of the stocks come back. So the market used to come back 5-6%. The stocks used to go down 15-20%, and some of the IT stocks in the large cap domain used to keep the market up. So that was the thing. I think this is the same thing that will happen in this market, because I've seen this pharma rally in 2011 and 15. This is what is going to happen. These pharma stocks will keep the stock market at a relative terms, but 80% of the stocks in the market will fall. And this is why I'm saying that there are no levels where you can buy or sell a stock. It is stock specific that you have to go. So, coming to the stock market now, or coming to the specific stocks, or what you need to do, what you need to buy and what you need to sell, in my understanding, what which sectors are good, which sectors are bad, where you should be invested, what do you need to just get out of the market completely, or sit and wait for 7,000 then you'll buy, or what you should do. uh See, what is most important is to save capital. So if you are down 40% in the market, do not, so those people who are up 40-50% need not do anything, just average when the market goes down. Those people who are down 40% with good quality banks, financials, and stocks, say a Maruti at 7,000 and all, also need not do anything. If you don't have money, do not sell those stocks just because they are down 30-40%, because eventually you'll buy the same stocks again. For instance, you have bought an Eicher Motors at 22,000, the stock is at 15,000 or 14,000. You are down 40% and you're thinking, oh my god, I should sell that, autos will not come back. Autos will be the first sector that is going to come back after this pandemic ends. So write that down. And that this is a big statement coming from me, but I believe that the auto cycle, which was in a downtrend from 2019 to 22, uh, would be over by 21, and the markets would try to buy those stocks. So probably one more year of bad a downturn is possible. So if you have bought very good marquee stocks, which are large caps, which are market leaders in good consumption domain, and yet you are down 30-40%, don't do anything, try to average at lower levels. If you have bought some stocks in which you are up 40-50% and they are also good quality, do not do anything and average when they come down, or if they are down. But if you are into the third league, in which you have bought infrastructure, capital goods, financials, which are in mid or small cap, IT mid or small cap, pharma, which are not directly linked to, say, any kind of drugs which are related to, say, a malaria, drugs which are related to pneumonia, etc., then you have to exit that. So this is the point that I want to make. So I am invested into the market. I am invested 90% into the market. I only have 10% cash with me, and I'm going to invest that 10% over the next 2-3 weeks. That's what I'm going to do, and I'm going to sit with it. So what I am buying, and I have told that time and again, I bought into FL. I'll buy more FL India. I bought into Tanla Solutions earlier. I'll buy more of Tanla Solutions. I'm invested into Kilpest India. I'll keep holding Kilpest India for the next 3-4 years. Maybe the circuit will come down and the stock may come down. I'll just invest. I bought just these 2-3 shares, and I'll stick with that. And I'll buy Tanla irrespective of where the market goes. And I'll describe about Tanla Solutions with a big video tomorrow. Hopefully by afternoon, I'm going to come up with a complete analysis of the stock again. So if you buy into stocks such as which are marquee leaders, which are monopoly, even if they are expensive, just ride through this tide and you'll make a lot of money. So a Maruti, for that instance, an IRCTC, an HDFC AMC, a Kotak, or an HDFC Bank for that matter, although I'm really skeptical about banks. uh, Now somebody is asking about PVR here. So PVR for a 5-6 year time frame, very good stock to buy, but you never know where it will end. Maybe 800, 700. Jubilant Foodworks in that regard. So a Godrej Properties, these are marquee companies in their own sectors, but again, will the sectors perform? So let's come to the sectors point of view. I believe the sectors that will come perform are select pharmaceutical, very select pharmaceuticals. I think Devi's Labs, Dr. Reddy's, Ipca Labs, and Cipla. These companies should perform, but I'm not very confident about all the companies. Second point is diagnostics. Now, diagnostic is going to become the biggest field, similar to what pharma became from 2010-11. So diagnostic itself have a Dr. Reddy's, a Thyrocare, a Metro Healthcare, Apollo Hospitals. You have uh, two or three other hospital companies that are listed. Financials into healthcare would also do well later on, not now but later on. Diagnostic companies like Kilpest India could do well, other companies in that regard. So diagnostics would be another big theme to look at. The third sector would be the consumer, essential consumer domain, which is FMCG to an extent, and autos, which are passenger vehicles like Maruti, etc. They would be in deep trouble at the moment. These are the best time to pick them up for the next 4 5 years. So Maruti Suzuki and Aisha Motors, some other Sunsumi, these are good stocks to buy from a 5 to 7 year time frame. These are the three major sectors to be looking at the moment because of the kind of situation that we are into, and something into the internet domain, something into internet of things, something which is related to, which is changing the way we work online, etc. And that is where Tanla Solutions is making a real change. FL India is making a real change in the society. Something like a TCS in the large caps would be doing the same. Tata Elxsi in the mid cap. I feel these companies would do well. A standard disclaimer applies. So look for these sectors. These are irrespective of the you can say where we are headed on the Nifty. But if you are invested in other sectors, then you have to be careful while investing into the Nifty. Also, InfoEdge is another company that you can look at. India Mart, Intimesh, etc. So look for these companies on declines and will do well, apart from the standard consumer companies that I have talked about many times on my channel. So this is it. Quite a long lecture, I suppose, on what is going on in the market and what I believe. Hopefully, you are not bored at all from my points. And so these are my point of view. What do you people think about it? Kindly write in the comment box, and I'll definitely read it about this market and my thoughts about the stocks. Okay, now coming to the questions that you have put up. So okay, Chitresh Joshi has said fantastic analysis of market. I am also expecting the bottom to be formed around 6,000. Also, I'm stuck in many of the companies. Top five, all Q1 to be, well, very bad. Yes, I believe so. The Q1 session would, Q1 numbers would not be that good. And probably the market has already priced that in. So I'm not concerned about the Q1 numbers. What markets have not priced that in is when will everything normalize. And I believe it's going to take a year's time for everything to normalize. And that is where the markets will get the jolt when June, July, August comes through, and the factories will not work at total capacity and so on and so forth. Then there will be trouble for many of these companies, especially the financials, no NBFCs or banking companies, etc. Yes, Jayesh, I am completely agreeing with you, sir. Thanks, Jayesh. Pankaj. How to place orders in circuits, both buy and sell orders. FL and IRCTC are in circuits and not able to. Okay, now another point I want to make. There are many stocks that I wanted to buy, but they are going up in circuits. I've left those at the moment because I know later on I may get it at these levels or at slightly lower levels. I'm not concerned. How to buy stocks on circuits is like this, that if a circuit is made at 100 rupee on one day and the circuit is at 20%, probably you can put up a buy order at 120 rupees for the next day. Say you, it is a Thursday, then on Friday you put up a buy order for 120 rupees as a pre-market order or after market order through your broker. So ask your broker if that is possible. So you can put up an order at 20% higher level if the stock is going at higher circuits, and on 20% lower order if you want to sell at a lower circuit. Then there is the maximum chance of you getting the stock or selling the stock at the pre-market. Otherwise, it is extremely difficult. I can tell you about the story about IRCTC. I was able to buy only 10 shares and I was very gung-ho about it, buying it between 600 to 800, and you all know about it. Eventually, I was able to buy only 10 shares, and I sold that up at 1200 rupees. And since I missed out on IRCTC, I went ahead and gone ahead and bought into FL India. And even in FL India, I was not able to buy the whole lot. And now I'm waiting for the circuit to open to buy it. Similar thing is with, so the money that I'm left with, since I have been invested into Tanla Solutions and I'm very bullish about it, I'm now going ahead and buying into Tanla rather than looking to buy IRCTC at 13 1400, or at the similar level buying into FL India. Good share, petrol at LNG, and you can buy in it. So I want to also request you that the super chat feature is on. So kindly ask me questions through the super chat, and it will help me answer your question in detail because it stays in this live chat framework for a longer period of time, and you'll be able to get an answer in detail from me. So kindly use the super chat feature as well, and subscribe to my channel so that it grows in numbers, and that helps me grow as well. So subscribe to the channel and like this feed as well. Which is better bank out of four? HDFC first, or Federal, or Yes Bank, or IndusInd Bank? HDFC for that matter, but I would suggest you stay away from the banking sector. M&M is good, but it has run up a lot. Again, wait for declines to buy into it. But my best pick in the autos is something like Maruti, Eicher, or Motherson Sumi. So, do we pull out money from market on these upsides? It depends. It depends. If you have a long-term view, then do not put money out of the market. I have not sold, neither bought not sold at higher levels. But if you are having a 6 months time frame, 6 months to 1 year, yes, of course, at 9100, 9500, 10,000, you can take out 50% of your holding and wait for lower levels to get into the market. I have Pidilite and Devi's Life. Profile, should I hold or book profits? Hold on to Pidilite. Pidilite is one of the best stocks to hold on to, and same is with Devi's Lab. Hold on to them. Okay. Dalmia Bharat is a good stock, but I think the infrastructure sector will suffer a lot. Real estate sector will suffer a lot, and same will happen with the cement sector. So I'm not very bullish on the sector as a whole. Uh, I've taken Tanla Solutions at 55. Now it has come down to 46. What to do? Absolutely. If you have it, then buy into it. I'm going to come up with a detailed video on Tanla Solutions hopefully tomorrow or by next weekend. I'm trying to mumbo jumbo numbers, and I'm going to come up with a very detailed and interesting video on Tanla Solutions. If you like that, then kindly let me know. I'll do that same analysis with other companies as well. And probably if you help me through funding through these live chats and Patreon, I'll try to do more of such videos. So I'll do Tanla Solutions in detail in tomorrow or in a week's time. Delta Corp for 18 years. I don't like Delta Corp, to tell you frankly. And probably if you want to buy something for 15 years or 10, 15 years, then FL India would be very good. Dixon Technologies would be a very strong candidate. Bata would be extremely strong candidate. HDFC, AMC for that matter, Whirlpool. There are many. Any stock that is in the bracket of 3,000 to 30,000 crore market cap, something of that sort, and is producing very good results, can get into it for the next 14, 15 years. Thanks, Dinesh, for your super chat contribution. If you have any query, just shoot forward. Thanks a lot. Okay, so I have a Patreon website as well where you can ask me questions any time of the day and I'll be ready to answer that straight away. Plus, there are many videos and articles that I put up there. So, this is the link to that Patreon channel that I'm having. Okay. PNB Housing Finance, avoid PNB Housing Finance. Would something like a Voltas or Whirlpool be a better bet on charts we look forward to? I think yes, Whirlpool or Voltas is good. Whirlpool is good and probably on declines, keep on buying, but do not expect any return in the next 1 year or so. Thanks a lot, Srinivasan, for your super chat contribution. Your top small cap picks and what level? Okay, so my biggest small cap pick at the moment was IRCTC earlier, but IRCTC at around 800 to 600 levels are best buy. Second is Tanla Solutions, and I have done a thorough research on it, and I think it is extremely at a very extreme discount, something like a discount of around 60 to 70% at around 50 54 rupees. So you can get into that. Other small caps, well, there are many that I can talk about. So FL India is one, and I'm invested into it. So here's a small disclaimer with regard to that. Whirlpool again is something slightly larger small cap, probably a mid cap type. Varun Beverages is another that you can look at. A pretty good stock to look at from a long term point of view. Then there is a stock called Frontier Springs, which makes springs for railways, and it's a 140 crore market cap company. It is pretty good. Bharat Seats at 40 rupees looks very interesting, but again, you should have a 6 7 year time frame. uh, it's extremely cheap at the moment, although it is in the automobile sector. So you need to be aware of that. Voltas again is one. Blue Star is another. So these are my some of the picks. But if you want three stocks, I would say Tanla Solutions, IRCTC, FL India. These three along with Dixon. So these four are my top picks in the small cap. But do your own research for sure. Jamna Auto is good, what if? But it's just that the auto industry need to come back, and then these stocks will do well. But try to get into pure auto companies rather than getting into Jamna Auto altogether. Okay, Subaroy has asked about Reliance, HDFC Bank, and TCS. All are very good stocks. On declines, you get into it for the next 5 6 years. It's going to give very good returns, but keep buying on declines. You're welcome, Srinivasan. Kindly visit my Patreon website also and become a patron there, and you'll get many exclusive articles and you can ask me questions there about stocks, portfolios, anything. SBI Cards is a very good stock, Priya. In fact, I bought into SBI Cards but sold at loss so that I can get into Tanla. But for a 6 to 8 year time frame, anywhere close to 500 rupees, if you can get a SBI card, those are very good levels to get into it. A very good stock, Jubilant Foodworks, but again, it's going to be under pressure over the next 6 months. So you'll get moves in it, and the stock will fall. So any levels closer to 1200 to 1000 are very good levels to get into Jubilant Foodworks. Why auto sector was up 10% yesterday? Nice question. Nice question, Ganesh. Uh, this is what short covering is all about. The people were so much short in those stocks, and there was nifty expiry, weekly expiry that was to take place, that the operators thought it's best to just trap them, and so the sector was up 10% for no reason whatsoever. Probably the bottom in the auto sector might have been made yesterday, but that is not to say that many stocks will not fall below their current price. So Maruti at 4,000, I've always believed is very good levels to get into. So if it goes to 4,000, go ahead and buy into something like a Maruti. Uh, Similarly, if around 50 rupees, below 50 rupees, Motherson Sumi is good, around 12,000 rupees. Aisher is good, and that is why the sector was up. Some big players really bought into it, although the deliverables were not great. So that is what sharp short covering does, and this is what has happened. And that is why I believe the Nifty may not sustain those levels, and we could see massive falls in the Nifty going forward because deliverables were low. And the weaker section of the stock market did well. That is why I believe that Nifty may not sustain 9100. Ashok Leyland bought at 90. Yes, if you have bought at very high levels, you can average it at around 40, 30 to 40 rupees whenever it come between then. Those levels, go ahead and average that. Probably 45 is also good, and buy more of it, and probably have a good 5 year view. You will get 100, rupees on Ashok Leyland over the next 4 5 years for sure. Thanks a lot, Khushi, for your super chat contribution. Your views on logistics sector, whether Mahindra Logistics can be accumulated at present level. I'm not very bullish on the logistics sector. If you want to play into such sector, you can buy into iShare rather than buying into some logistics stocks. If you already have, say, a logistic company, then average it, but not a lot. Average it on decline and sell it whenever you reach to a particular level where you have found your price, or you're not losing a lot. So I'm not gung ho about the logistics sector, although a company called Blue Dart is pretty good in that sector, so one can look at that. Mahindra Logistic is also good, so you can average that at lower levels, but better to be in leading sector, which I again said, diagnostics. Maybe not pharma to that extent, some pharma stocks, some diagnostic companies, and FMCG on declines, but not pure FMCG, some other stocks as well, into consumer. So look to buy into consumer domains. Okay. Dr. Pawan, iShare or Escorts? iShare. If you compare both of them, I would go for iShare. The valuations are very cheap, and the company would come back in a vengeance. Just imagine if the economy again chugs along 3 4 years down the line, this stock would again be 35 40,000 easily. Escorts is in a different domain altogether. So Escorts is into agriculture, and you can say tractors, etc. So it has a league of its own. So you can buy both, but if you compare both of them, I like Aisha at these levels. Okay. Samani Ceramics is a value buy. Again, stay away from anything related to infrastructure, real estate, or tiles. Anything related to ancillary of these. So paints is good because they have the leverage of the oil being at 25 $30 per barrel. Apart from that, do not get into this trap of buying anything which is related to infrastructure, or capital goods, or something related to real estate. So again, such companies which are into ceramics would only do well when a lot of houses will be built, and I do not see that happening. And that's why I have not talked about NBCC, because although I like the company, it is debt free, it gets government orders and so many other things. Look at the price at the moment at 17 rupees. This is because of the kind of forecast that people are having with respect to the construction sector, and I think it's going to suffer big time. So construction, infrastructure, real estate, and finance is going to suffer big time. Stay away from anything related to these sectors. RCF is a complete avoid. Okay. Infosys, rather than Infosys, I like TCS at these levels. So I think you can get into TCS, but if you are holding Infosys, these are good levels to average Infosys. Again, I want to remind you that the super chat feature is on. So kindly ask me questions through super chat. It will help me grow the channel. It will help you get detailed answers from me, and also subscribe to my channel and like this if this feed. All right. Dr. Lal Path Labs versus Thyrocare. I like Dr. Lal. I think you should have both. I think this sector is going to just go through a complete turnaround over the next 5 6 years. So at 8 10,000 crore market cap, Dr. Lal, at 4 5,000 crore market cap, Thyrocare. If it is possible with you, try to buy both of them. Shivakumari has asked about Shelley Engineering again and avoid, and probably get into pure consumer stocks which have already fallen, something like a Bata, something like even a V-Guard for that instance, which is at 150, 160 rupees. Get into pure consumption stocks and you'll do much better. Marico, Tata Consumer, and there are many others. The granules, your take, please. Granules is a sell if you have it on any up move is a sell. Others you can hold. So Crystal, Cadilla, Lal Path Labs you can hold. Yes. And in small cap auto sector stock. So I just mentioned about something like Bharat Seeds and to an extent, if you can look at Frontier Springs, these are good stocks. But again, these are risky propositions. Thanks a lot, Madhav Reddy, for your contribution. Opinion on lemon tree. Okay, so yes, this is one sector I have not talked about in detail. So just a couple of minutes on this sector. This is hotels chain, and this is also here in the place where I live here, in the north. So I suppose Lemon Tree is a very good company. Lemon Tree is a very good hotel company, but it's going to suffer a lot in the next 1 year. And as I mentioned about the diagnostic sector that is going to come back big time, I think the hotel industry is going to go into doldrums even further. So I'm sorry if you're holding the stock, you would have to sell it on rallies if the rally have come in, and stay away from the hospitality, hotel, airlines sector altogether, even to an extent railways at expensive levels. So IRCTC at very expensive levels will not be sustainable. So I think it's a sell, Lemon Tree, and the whole hotel industry, hospitality, etc. Just stay away from it for at least the next 6 months. Okay. Yes Bank, your view. My view is if you're holding Yes Bank at lower levels or if you're making less losses, then sell it. Why I'm saying that, that all that has to be played, that had to be played, has already played out. So the move from 5 rupees to 80, 85 rupees has already played out. And those investors who have invested into Yes Bank have been invested into the stock at less than 10 rupees a share. So yes, it's not going to go below 10 rupees, but it's not. This is not a certainty that the stock will go up, say to 100, 150, 200 rupees, unless a lot of funding comes in. And they have given loans to some of the most riskiest loan, and with this lockdown, it's going to suffer even more. Thanks a lot, Madhav, for your contribution. And if you want to get into any share, Madhav, then it's better to get into uh, consumption, even autos at these levels, at lower levels, not at these prices with a 10, 12% upside, but and comes back to lower levels. Autos are even good, but look for diagnostic companies and consumption companies, consumer discretionary companies, Madhav, to invest into. View on Reliance. I like Reliance. I like Reliance at 1000, 1100. Reliance is doing well because of two or three reasons. One is oil has gone up, so it went to $20, below $20, something like that. It has gone up by 50%. That will help Reliance. Second is because of the data usage that is taking place in India, because Reliance has now become the number one company with Geo. So in data, so it's going to and they have also increased prices, so it's going to help them. And the third point is the other businesses of Reliance, which were doing well, are going to set to do well later on. So Reliance is a good stock to buy at around 1100,000 levels. Ravi Shankar, thanks a lot for your contribution. If you have any query, kindly put that through, but thanks for your contribution. Mobin Babu has asked, what about Indian Oil Corporation? I like BPCL on declines rather than buying into IOC. And don't look at prices, don't look at how much the prices have gone up. If there is a major correction in the stock when the market falls, and I'm confident market will come back to 7,500, 7,000 levels, get into something like a BPCL rather than IOC. Any comments on Black Rose and Daulat. Black Rose is a good stock to buy, but I don't want to get into, I mean, such stocks in which I have not done a thorough research. So in Kilpest, I did a thorough research with some of my colleagues, and we decided to buy into it. Black Rose is another small cap, very small cap company, albeit into chemicals. I have not done a detailed research on it, but prima facie, looking at the numbers, they look good. Entry level for Dixon Technology, entry level would be somewhere around 33, 3400. It has run up. I can understand that any 10 to 15% decline from these levels would be very good levels to get into Dixon. Avoid sugar stocks. I understand they are running up because they have been given orders to make more of alcohol, so that alcohol based those products are made. But if you are holding it for years and you're making losses in it, avoid. If you're making profit on it, then try to trade into it with a stop loss and then get out of it in profits. That's my opinion. Avoid Shelby Hospital. But try to get into Apollo hospitals or look to get into Dr. Lal or Thyrocare. Yes, I know Take Solutions went up by 20%, but looking at the numbers, it doesn't suffice me that it should. So, you see, many stocks have gone up 20, 30, 50%. It doesn't mean those stocks are good. Many stocks have gone down. For instance, Tanla had gone down by 2, 3% in a market where everything was going up. Similarly, Kilpest went on going down from 100 rupees all the way to 50, 60 rupees when the market was up, and now see with the approval how Kilpest has done. So it doesn't matter. It is just that looking at the fundamentals and numbers, I didn't feel that Tech Solutions would perform better compared to something like for instance, in IT. And I don't talk about many stocks in IT, but some stocks that come to mind, something like a Sonata Software, something like an L&T Infotech, or you can say a Tata Elxsi. These are good stocks at reasonable values at the moment. But that doesn't mean that you go ahead and buy it. These are just examples where I'm saying that some companies keep on growing 18, 20% gradually. And Take Solutions started to do that, but later on have really disappointed on the numbers front. And that's why I said it is an avoid. Okay, battery companies. Battery companies will only do well when auto industry will do well, or when electricity is extremely scarce and people go ahead and buy into a lot of inverters and so on and so forth. So rather than buying battery companies, let's buy the auto companies itself because they are coming extremely cheap at the moment. Thanks a lot, Madhav, for your contribution again. Thank you. Your view on Tanla is good. Thank you. Yes, I'll come up with a detailed video on Tanla soon. Motherson Sumi is interesting at 60, but buy in tranches. So buy every month, something like 20% over the next 5 months. So you buy, if you want to buy 1 lakh rupees of Motherson Sumi, you buy 20,000 of Motherson Sumi worth of stocks at 20,000 rupees this month, and over the next 5 months till September, October, you buy the whole lot. So that is what I would tell you to do. Is there any for future retail and future consumer? Wow. Madhav, I was invested in future consumer. So let's tell you something. So I made money in future consumer in 2016 to 18. I invested into future consumer in 2011 at 6 rupees when it was not future consumer. The name was something else. I made money then also, selling at 8 or 10 rupees. I have seen the whole journey of it extremely closely, and I'm disappointed with the management, with the way Mr. Kishore Bayani has handled the company, and I make no qualms about it. That the problem with Future Consumer or Future Group is debt, and due to which pledge shares started to get sold. I mean, below 20, 18 rupees or something like that. And the selling was so intense that we went to around 6 rupees or so on Future Consumer. Um, I have a firm belief that from now on, if somebody asks me about Future Group, and this has not happened first time, so this happened in 2007 8, it has happened again in 2019-20, and from now on, I would never look at any Future Group stock, even if it goes up 1,000 times from here, 100 times from here, because unless the management changes its stance on debt. So the debt never came down, and they kept on diluting equity. So I don't think there is any chance for the stock, although there could be a chance that the stock goes to 60 rupees again. I don't know about it, but I would completely avoid it. Very good stock, Johnson Hitachi. I would suggest that you get into Johnson Hitachi for sure. It's a very good stock to get into on declines. Amber is again good, just like Dixon, and probably at 1100, 1150 rupees. I don't know what is the current price, but a very good stock to buy for a 3 4 year time frame. Can you please tell? Okay, ABT Natural Products. Now, I analyze this company. I think I have done that on my channel. So you can go ahead and look at the video on ABT Natural. Very good company, but slightly expensive because the numbers were not getting through, and probably now it will suffer a lot. So they try to make enzymes for and natural products for raw material products for the, you can say, FMCG products and so on and so forth. Now, the problem with it is the margins. The second problem is the numbers that they are coming up with in the bottom line. So there's not much EPS expansion that is coming through. And that's why I would not suggest you to buy into it. Gujarat Gas is good. Gujarat Gas is good. I was not able to make video, or I have made that earlier a video, so you can have a look. I don't remember whether I made a video or not. If I have not, I'll make a video. Gujarat Gas is good, as is Mahanagar Gas and IGL. Symphony, rather than buying into Symphony, get into a, something like a Blue Star or a Hitachi or a Voltas. That would be much better. They are leaders. So thanks a lot, viewers, for all your time, and I tried to answer as many questions as possible during that period. Kindly support me through Patreon, and please like and subscribe to my channel. It would help me a great deal, and I'll try to be online again on Tuesday evening. I'll let you know in advance. And it was nice talking with you. And kindly do write what you think about the markets and my assessment of the markets, the 5 points that I made. Thank you.